Welcome to welcome to Charts and Coffee, gang. Great to see you all. Happy Tuesday. We are rolling into end of quarter. This is not like any other week. We got three others like them this year, and this is really only second to end of year in terms of jockeying for position and the kind of volatility that we could see as we wrap up a quarter. Think of the quarter as a report card, right? That's exactly what it is for folks who are managing money. It's sort of a here's what I put you in, and here's how you're doing, and here's how you're positioned for the next quarter. And folks will look at that and sort of grade the person managing their money, thinking, all right, they're doing a good job for me or not. Therefore, there's a lot of pressure on folks who manage money to have a good looking portfolio at the end of each quarter, clearly at the end of each year. So that's the psychology that I try to keep in my mind. What is the job that certain people have as they're rolling into end of quarter? Of course, for us, lots of volatility. And we continue to rely increasingly on our volatility tool, on the HPMR, on the DPMR. It's an edge for two reasons. One, folks at Simpler are the only ones that have access to it. I created the thing. We really fine-tuned the data and the curation of the data. And so you folks are the only ones with access to it. Number two, when we have a volatility environment, I need a volatility measuring stick. That's exactly what it is. It is outperforming everything else that I have right now, things that I love, right? It's not a matter of something being good or something being bad. It's just that the market has presented us with a bag of nails. And I've got a screwdriver and I've got a saw and whatever else, but I need a hammer. And that's exactly how we're dealing with this market, the right tool for the right job. And as long as volatility is elevated, and we all know it is, right? Can't imagine why though, right? As long as it is, we will continue to use that volatility tool. All right. Let's see what else we have here. Let's take a quick look at our sort of market pulse, if we will. We'll take a look at three specific symbols in an effort to get a better idea of what's happening in the broader markets. Again, treasuries, currencies, indices. We can even look at energies. We could add crude oil to this. So let's do that. S&P, really not much to say. Currently, the daily is an inside candle. Currently, the 1 hour is an oversold chop environment. If I jump on over to the 6E, this is the euro. This is the inverse to the dollar. Euro heading higher means dollar is heading lower. And generally, weaker currency is indicative of a less hawkish or even dovish central bank. We can argue that the Federal Reserve is on track to be both less hawkish and then eventually transition to dovish. All right, let's take a look at treasuries. If dollar's heading lower, what would I like to see? I'd like to see support in ZB. I'd like to see some buying support. I'd like to see that we're reaching some sort of level where yields are not increasing, right? That yields are actually settling down and starting to move on the chart, ZB, TLT back up, which means yields are moving back down. Now, don't really have much more than maybe a doji right now, maybe a minor low, and not much else at the moment, but clearly not a dramatically down day on ZB, on the long bond. And then finally, crude. Crude got a huge reprieve, gang. The central bank around crude, which is OPEC plus, came in and said they're committed to these production cuts. And as long as they're committed to production cuts, that is a bullish factor. We add in other bullish factors like maybe some economic optimism, like maybe some demand. One of the things that I like to do, and we'll do this with the Mastery folks, my Mastery folks, we have, of course, our macro and weekly session. Where is that? Right here. We have that coming up at 3 o'clock today. So super stoked, because one of the things I'll show you is how I look at traffic and things like that to see, well, where is demand compared to a year ago? One thing that's great to see demand for crude is just, are people driving around? That's one aspect to it. So I'll show you how to, it's a neat little thing. I'll show you how to do that later on today. All right. So that's it for just sort of taking an overall look at the pulse, if you will, of energies, currencies, treasuries, indices. Let's jump into our questions. As always, the best part of our show. Jaws kicking it off from our training room. Hey there, Jaws. Thanks for all I do. My pleasure and my job, my friend. On average, how often do I replace my PC? Every now and then, and I know everyone here knows Daryl. He's the most famous amongst us. So everyone knows Daryl from our webinars. And every now and then, my computer will slow down or something, or I've just, worked it to the bone. And I'll reach out to Daryl and I'll talk with him, and he will spec me something out from the good folks at tradingcomputers.com, Falcon. And probably once every, let's see, this is 2023, about once every 3 years, I'd say. I can't remember how long I've had this one, the one that I've got right now. I'd say once every 3 to 4 years, Jaws, every 3 to 4 years. Although this one, I will say the rate at which I have to replace a computer has a lot to do with whether from time to time I'm opening it up and getting the dust out of it. And also, how much memory did I have to begin with? A lot of times we over CPU. We pay too much for whatever our processor is, and we underpay and we under-equip our computer with memory. I'd rather have an older CPU and just jam that computer with memory. I know that's a very rudimentary, kind of blunt look at how to spec out a computer, but most folks are just obsessed with whatever the new processor is, and they're not spending enough time thinking about memory is really what I think for us drives a lot of our computational speed and our reliability and our ability to run TOS and our ability to run 9 monitors. And I've got 10 charts running, and they run fine because I'm adequately equipped with memory. All right, so next up is looking at our YouTube. All right, great to see everyone. Jet Jockey, good morning. Before pulling a trigger on a 50% conservative 1 hour daily price movement wave, combination wave trade. Okay. One of the things that we do when we're looking for opportunity is, for those of you that may say, okay, I'm not quite sure what that even means, Raghee. One of the things I love to use in the context of a trend is either the HPMR or the DPMR, the hourly price movement range for day trading, or the daily price movement range for short-term swings, and where the wave, the 34 EMA on the high, the close, and the low overlap. So what does that tell me? A price-based tool, a moving average, is overlapping with my volatility zone. So when I get that in a trend, it's rather powerful with lots of Ys, price-based Y and volatility-based Y. Heck, if you've got V-score or an anchored VWAP, you got any kind of price-based volume, you can throw that in there too. So now you're rocking 3 of the 4 factors of the market: price, volume, volatility. The fourth, by the way, is time. And so that's what that setup would be. I cross-checked the 5-minute. Nope, we don't need to look at the 5-minute at all unless you want to. I do not. Hoping for a sign, since I was wrong twice already. Is this a sound strategy? Here's one thing you can do. If you're finding that volatility, and if you've got the HPMR and or DPMR, as well as say your 5-minute in line, it's not going to hurt. What I would say is, let's say the 5 minutes in a downtrend and you're looking to buy a zone on the 1 hour or the daily. I don't like multiple time frame confirmation. However, if the trend on the 5-minute is neutral, there's a higher probability that we're in a good zone on the daily or on the hourly. But I'm still going to use the zones on the daily or the hourly. So I don't use multiple time frame confirmation. But for example, here's AMD closing in on the DPMR zone. You can see this both on the daily and the 1 hour. All right, I would like to be a buyer, right? I would like to be, for the most part, long. I can't do it on the 60-minute chart. I've got a downtrend. The 5-minute is neutral and the daily is long. So if I want to be a short seller, it's got to be on a 1 hour. And then that's going to give me a zone. It's going to give me structure. It's going to give me a certain time horizon. How long am I in the trade? On the daily, again, a little bit different of an animal. So what I want to remember is each time frame has its own structure, gang. And that's just the absolute opposite, right? That's just the absolute opposite of multiple time frame confirmation, which I do not use and am not a proponent of. But little nuances like if the 5 minutes still in a downtrend, can I wait for the 5 minute to go neutral? Sure. If that's an extra criteria that helps you visualize what it is you'd like to see before the trade gets entered. So yeah, no problem. It's really up to you. You have the tools and you have the ability to automate and understand the structure across multiple time frames. Go for it. There's no harm in that at all. All right. Next up is can we take a look at the health sector? Sure. Let's pull up our multi-chart, which is a view of the stocks that are in XLV in the order in which they're weighted. All right, so this is that layout. I call it the multi-chart because, well, it's multiple charts. All right, so it looks like J&J looked like a potential short. Yes, J&J, Pfizer, Abbott, and Bristol Myers would be where I would focus on the short side, right? And frankly, it's hard not to want to be short on everything except for maybe Merck at the 200, AbbVie at the 200, and maybe even Lilly. Most of these names are below their 200 propulsion, and four of them are in downtrends, including the Tide, right? So four downtrending boats, the stocks, and one downtrending Tide, the XLV itself. So the short side, Ryan, does look better than, say, for the most part, the long side. Again, I can think of maybe three opportunities for the long side. AbbVie and Lilly are your relative outperformers to the upside. AbbVie by far. And then anytime a neutral market tests a 200 propulsion, there are things we can look at there. Yeah, for sure. All right. Next up is question from our, let's see, from our training room. Bob's asking about Tesla. Sure. While we're on the multi-chart, let's jump on over to XLY, which is where Tesla is heavily weighted at the sector level. And if you take a peek, XLY, let's pull up the right. There we go. So if you take a look at XLY, this is Amazon, Tesla, Home Depot. Amazon and Tesla are doing okay, right? Target's doing okay. McDonald's and Nike are probably our most bullish because we're north of the 200 propulsion and we at least have that neutral trend. Now notice Target has a neutral trend as well, but it's red momentum and it's below the 200 propulsion. Nike has red momentum, but again, it's just barely above the 200 propulsion. So tricky here. Tesla, let's dive into Tesla specifically. And you know what? Let's do it on the, let's do this on the TradingView charts. So I'm pulling up Tesla on TradingView, where I do have HPMRs and DPMRs and our sector slow stow and our V-score, things like that we can run on this platform. And take a look at Tesla. It's a neutral market. It's arguably overbought. So if you want to look at this through the lens of toss, think or swim. Let's move this 5-minute out of the way. By the way, the 60-minute time frame is looking nearly oversold and neutral. And then the daily is also looking nearly, you can see here, oversold. And well, it bounced off oversold here on the 13th. So frankly, everything we're seeing here, Bob, on Tesla, here's where I'm challenged, because this is where it's challenging to say, was there a trade? Not is there a trade? And was there? Yes, because we were oversold here, neutral environment, trend that preceded was bullish. We have a bullish bias. We hit the DPMR. So maybe if we hit the DPMR again, but really this was the setup. And then now this is basically follow through. So if I could find something ideally as similar to that as possible, neutral, oversold, stochastic, DPMR, I'd be fine. What it looks like we may get in lieu of that is maybe a DPMR, maybe the mid of our slow stow, right, in a neutral environment. So that might be sort of the hybrid of that setup that was really textbook on the 13th. All right. Mike asks, good morning. When I scan for a setup or stock and it has a nice setup but the price is below 20, would I still trade it? So Mike, when you say it has a nice setup, if it's below 20 or even 10, a nice setup has to accompany a volume ledge, some kind of price-based volume support or resistance, depending on what you're looking for. I rely on volume a whole lot more when the price is that inexpensive. Okay. So in other words, do I trade micro cap or large cap stocks? I like liquid stocks, 750,000 to 1,000,000 shares traded per day. I like strikes at the option level that are at least 500 to 1,000 open interest. And I like stocks that are over 20 bucks. Yeah. So whatever you want to call that, those are the criteria. I get less hung up on micro versus large. And I want to at least tell you all, that's the transparency we need. What are the criteria, Rog? That's the basic criteria. All right. Jim asks, just curious, does T+3 settlement have any impact when window dressing trades might occur? I would imagine, I'll be honest, Jim, I don't think about that. I just think about what it is so when the window dressing's occurring, all that person who's managing money has to make sure is when those statements go out to their clients and it shows their holdings and even the price in which they own it, that's really all I'm thinking about. So I don't know that factors in or not. I've actually never thought about it. To be quite frank, I never have. It's an interesting question, but I just believe it. For me, it's whatever they can show that they either have lightened the load up on or increased the size on or added to the portfolio or removed from the portfolio. That's it. And then whatever that cutoff would be, end of day Friday. All right. Next up is, does the OPEC announcement affect the movement of natty gas at all? Robert, sometimes it does. Sometimes you'll see a bit of a delayed but sympathetic reaction. I don't bet on it, but sometimes it will. Even though OPEC is going to have more impact on RBOB gasoline and heating oil, natty gas is not part of that. It's not managed by OPEC. But yes, because think about it in terms of just the overall energy market, right? The energies in general. Sometimes I notice it does, but I haven't looked. You know what? Let me check, because I haven't looked lately. Let's go check. What is the current correlation between natty and crude? What is the current? I'm looking right now. Is there a correlation that's happening that's fairly interesting between natty and crude? Survey says, just bear with me. Let's see. 61%? No. 59%. 59% sympathetic correlation. It's better than half. So I'd say not useful, right? Interesting question, though. But mostly they're going to move together. Sympathetic correlation, positive correlation, if you will. All right. So what do I see in natty gas? Asked Jan. So if I'm going to look at natty gas, we're going to look at the commodity, right? So however we want to then trade it, whether that be KOLD, Jan, as your question is, or whether that be UNG, etc. What's happening with natty? It is still in a downtrend. That's what's happening with natty. It's still in a downtrend. So I would say, as much as I don't want to see a lower low, we are not clicking at all with the seasonal tendency in any way. Prince asked, what price movement range would I be using on a 30? Likely the HPMR, Prince, but you could put a DPMR in the 30. Just depends on your time horizon. All right. So thank you so much, gang. Bob, I appreciate that. RH, thanks for making trading simpler to understand. Well, it's our name and we try our best to live up to it. Thanks, Bob. I appreciate it. Gang, be good to each other. My mastery folks, my futures folks, I'll see you for our morning of day trading and swing trading setups in just a moment. All right, gang, take care.